Greetings, Dr. Jeffrey Scott here, and this is my Market MRI Pro update for February 13th, 2025. Title this one, Breakout to New Highs, or is this going to be a bull trap? Again, my name is Jeffrey Scott, and my email address is marketmripro@gmail.com, and it is late night on Thursday. As always, these sessions are for educational purposes only. Anything I talk about or recommend should be taken in the spirit of education and not investment advice. The intent of this video is to demonstrate the tools of top-down analysis and how I apply them. Trading involves risk, and you alone are solely responsible for any investment decisions you make. I may own or intend to buy or sell any stock mentioned in this report. Trading stocks and options should be considered risky, and you should always consult with your financial advisor before making trades. And as I've mentioned previously, I have tools in multiple different platforms, and am an independent trader, trade for myself and nobody else. I do like to teach, and I do like to send out a nightly video and a note of what I think is going on in the market. And what I do with that now is I do it through my Google group called Top Down Trader. It is totally free. It is not about solicitation. I don't share your list anywhere, but what I do is I send out on almost every night a quick video of what I think the market's doing, maybe a stock that I might be looking at, and then we'll have some various teaching events. I recently had a 3.5-hour sort of soup to nuts, how I identify trades, how I take them, and looked at some of my favorite option trades. One of the things I do is I follow a list of leaders. I put this list together, as you can see here, on November 24th, and I was looking for a breakdown. And like the market, middle of December, we just pulled back, but it really didn't break down. It just went sideways and choppy. And lo and behold, sort of a cup and a handle and a breakout to all-time highs on my leaders index. So am I bullish here? I'm more bullish when this thing is doing well. And it makes me more optimistic that this could be a breakout towards new highs, although I won't forget what happened in 2021 when the Russell looked like it broke out of a Darvas box, and that was just the beginning of the next year of declines. So a false breakout is meaningful. Right now, it looks like it's breaking out. Lots of news this week, so I've continued to look at this. You can see on Friday we got import prices, retail sales, industrial production, capacity, business inventories, and almost no days this week without a Fed head. We got Lori Logan speaking in the last hour on Friday. We've had a number of weeks with weak Fridays. This was a week where the Monday actually didn't do poorly, unlike the last couple of weeks. But we'll see what happens Friday. You can see we still have some earnings left this week. I was wrong. Amazon was last week. Unfortunately, I forgot to change this out, so I kept looking at that, which is silly because I have Amazon, and I knew that. So we're getting near the end of the high potency earnings weeks, which maybe will be good. The market can settle down. But boy, as an example, Airbnb beats up 14.6% after hours. Roku beats up 11.5%. DraftKings missed, but they had from this quarter, but on the year they looked okay. They were up 7%. Then who lost? INFA down 32.7%. Twilio down 8%. Palo Alto Network, such a leader, down 5%. You're being rewarded if you do great. You're being punished if you don't. And that makes this an extra challenging earnings season. So let's go into my timing model first. So the weekly model isn't finished until the week is over. Well, the week isn't over yet, obviously, but what I wanted to point out is we still are long weekly Qs, long weekly diamonds. We got above the WMA, which is great on the Russell, but the bongo's still red. And I'll tell you, I'm really pissed at myself for, not at myself, you got to follow the model. And the model made me a little bit less bullish because this week closed below the WMA. but it just closed below the WMA. It closed at 580.49, and the WMA was 581.28. So it closed about 40 some or 80 some cents different. Now, it's really a shame because it was enough to flip us into a sell signal. Now, did the market really do anything since then? Had a little bit of a move. So this took me away from uber bullish and made me much more neutral. And the Russell's been weak. So not bearish, neutral. The daily timing model, which had been all four greens, actually saw, well, yesterday the Russell had turned, but let's see where we are after the market close on Thursday. So let's switch to the dailies. And again, I'm just really focusing on this line here when it comes up. You could see the Russell is still red, and the spiders, the Qs, and the diamonds are green. So neutral on the weekly, bullish on the daily. So a little bit better than neutral. Still cautious. And I think you have to be cautious because we're getting right up to this area of double tops. Got a little ways to go on the Qs. The Russell still struggling. We'll see. But when you look at the major indices let's just jump to TradeStation to look at the indices because it's got my trend lines on it. You got to be impressed. If we look at my daily stock market, you could see the spider breaking out of both of the preformed Q memory from Sagar's trend line resistance. That's pretty exciting. When you look at the Qs, they broke out from trend line resistance. The diamonds are still below both trend line and all-time highs. We're getting close to all-time highs on several of these. The Russell, optimistically, it's riding up its trend line, but it's still below the 50. The dollar actually broke down some, down almost 0.5%. Well, that's kind of optimistic, or not the dollar, the VIX was down 0.5%. The dollar was down even more. Not more, it's down 0.24%, but it also took out some support. Weak dollar is great for the market. I think the tariff news that occurred on Thursday, the reciprocal tariffs perhaps wasn't as ominous as some people thought it might be. Now, commodity-wise, gold liked it, was up 2%. Silver liked it, was up 0.41%. Actually, gold was up $2 or 1%, about 0.5% on silver. Oil pulled back into trendline support and gave a bounce. We'll have to see what it does. Natural gas threatening its recent highs and then pulled back. The 10-year was down, and that helped the markets. Pretty bizarre considering that the PPI was hot, and maybe it was just the relief on the tariffs. But the 10-year and the 30-year were down some. So a nice day in the markets. If we go and we look at that daily briefing just to see how nice of a day it was. So this is something that I run typically on my one of my screens all day long, and it will update whenever you hit the refresh. So I'm just pulling up the end of day update. First thing is look at the level of green here and look at where things closed in their daily range. The only thing that closed way off the daily range on this screen is the VIX, and that's good. That means the market was strong. So let's just rank by strength of one day. You can see Q's up 1.44, Russell 1.13, Spiders 1.06, and Diamonds 0.82. And as you can see over here, they all finished near the highest part of their range. Now, over the last 5 days, which would include last Friday, you could see the Qs and the Spiders are up. The Diamonds are flat and the Russell are down. We had enough healing in the market this week that if we look at the new high, new lows on the NYSE and the NASDAQ, they've turned positive in all time frames. Down here, and why I like looking at this during the market is because this thing gives me a sense of what's working. The first thing I see, one-day change, S&P 500 sectors, they're all positive. Awesome. And you can see here, they all closed in the upper part of their range. And if we looked at what themes were working, 4% for cannabis, but you look over the last 5 days, it's down. Blockchain, cyber, this will probably be down or worse tomorrow with a Palo Alto. Copper, autonomous electric vehicles, big day for Tesla, telemedicine, digital health, even biotech made the list. What was weak in the market? Just flip that around. Not much. I mean, you look at only a couple things were negative, aerospace and robotics. What I've done is I've created a list of themes, and when we release this commercially, you'll have the ability to add additional ETFs. It's just a great tool. And then during the market, it's as simple as hitting the refresh, and it's within seconds, it's updated. So to save on server time, we took it off of auto updating, which we were doing at like every 30 seconds, because the refresh is so quick. I'm not staring at the screen. Now over here, we've taken 3 different major indices, S&P 1500, NASDAQ, and NYSE, and asked 4 questions. How many sectors are up? Well, today it was 100%, and you could see how it compared to yesterday. Also 100% on the NASDAQ, and almost all the NYSE, 83%. What about industry groups? 81% were up in the market on Thursday, 75 in the NASDAQ, and 80 in the NYSE. Super strong week or day. What percent of stocks were up? 80%, 68, and 75. So most of your stocks should have been up. You should have made money in the market. And then where are we sitting over a little bit longer term? What percentage of the stocks are above the midline of the Bollinger Bands? In an uptrend, you typically bounce off the top down to the midline and back up. So in the uptrend, you usually have a lot of stocks above. In a downtrend, you bounce off the bottom, and then you have resistance at the midline. So 46%, 47, 52. So we're kind of neutral on all 3 of them. A super strong day, but overall not any sign of overbought or oversold. Another way of looking at overbought or oversold is taking each of the stocks in these indices and looking at where they are in their Bollinger Bands. Percent B, 0.5 says your midline, 0.1 you're at the bottom, 0.9 you're at the top, and then the Bollinger Bands will capture about 90% of the movement, and often will have stocks above or below. So what we saw in the market on Thursday is what I call a right shift, where we shifted to the right side. It was a strong day in the market. The gray bar here represents that a day ago, 12% of the stocks were below the bands. Today it's 6. A day ago, get that right, 4% of the stocks are above the Bollinger Bands. Today it's 6. So we got a much stronger pattern, but it's not an overbought pattern by any means. When we're overbought, the stocks above the Bollinger Bands can get in the 25 to 35% range. Market breadth, we're looking here at charts of the NYSE on the left, the NASDAQ on the right. You can see the powerful trends we have had, how far we are away from the 200 period moving average. And this is, you can see how strong the daily bars were on both the NYSE and the NASDAQ. When you look below here, you can see, if you just highlight the bar, you can see new high, new lows were positive, advanced declines, and up-down volume, which are these. These are stocks above the 17 in green, 50 in white, actually 20, 50, and 200. And in periods of times where the market's getting overbought, you start to get extended here. When you're going to bounce, you pull back. No signals here except looking at the new high, new lows, advanced declines, and up-down volume is powerful. It's green everywhere. Strong day in the market. And I use ratio charts to get a sense of what's working. And what I've done is I've created, upper left will be Bitcoin, just out of curiosity how it's comparing to the spider. But everything else is compare a sector to the spider. And what it does is it normalizes. And if things like XLC communications are pointing up here in this right upper corner, they're the leader of the market. You can see that staples has moved up, utilities moved up, technology's moved up. The market has improved considerably. Healthcare, which was starting to lead, pulled back some. Financials pulled back some. So right now, the superstar looks like it's communications. It's interesting to me, with the market as strong as it's been, that the more defensive play staples seem to be going up as much as technology. The true power of this product, though, is in the JAS layout screen. This is my chart that I use. I have the extension thing called the high-low jump. I have my trending indicator called the bongo. In here we have a number of things. We have, obviously, candlesticks. The red is a 200, the white is a 50, and the green is a 17 simple. This white line here, which you can actually grab and move, is actually the relative strength, which is only 27, so that's not a good thing. If you look at something like, well, we know number one in the market right now has got to be Meta. I can't even remember the last day Meta was down. And you could see in Meta somewhere, we should see that white line. There it is. And what is it at? It's at 92%. One of the strongest stocks in the market right now. Down here I have regular volume showing me the biggest volume days, and those are typically big moves in the market. My dots, which include everything from my EMS signal, my CPR signal, a gap, volume, breakout momentum, squeeze, PSARs. This is how I like to look at when does a stock's relative strength versus the spider start to move above the moving average. And then this is OVV. All right, so I can do top-down or bottoms-up. If I look from a top-down perspective and I want to see what's working in the market, I can see that leadership was in materials, tech, and communication in the market on Thursday. I like looking at a little bit longer time frame, so my short-term momentum would have me looking at consumer cyclical, technology, and consumer defensive. So one way I could say, all right, I'm interested in consumer cyclical. So here's 380 stocks. Now, these are the industry groups in consumer cyclical. Let's look at the top industry groups. Maybe we look at the top 5. 1, 2, 3, 4, and 5. And then this would be the stocks that were the top 5 in the top sector. And then I could rank them if I wanted by short-term momentum. Let's look at some of these. Dutch Brothers, great earnings. Let's see if they're even in here yet, but we have the earnings here. 7 cents. A big surprise. Revenue, also a surprise. And the stock got rewarded with a big gap up. Now, I often talk about how I look at stocks like this. And in the Morales and Catcher, the O'Neill disciples, they introduced us to a Bible gap up. And this is a derivation of it, this fourth dot here. And they talk about how these are very tradable. Now, in my experience, which is not nearly as great as theirs, often these things will come down before they start heading up. So sometimes when I see this pattern, what I'm likely to do is maybe set a buy stop a little bit above the high of the session. But what I really want to see is I want to see it pull back some, give me a flag, and break out. Sometimes they're so strong, it's not going to happen. Shoes were weak until Crocs. And Crocs had a very strong session in the market. Come on, Mr. Crocs, show me what you got. And you could see what weak is, and they had a big gap up as well. Pizza, I think there's a foreign sovereign fund that's looking at buying Papa John's. Bookings, it's got great momentum because of the Wednesday bar. But sometimes after this big bar, this is what you get, which is not a positive day. Now, are earnings out yet? If we highlight it, it shows up, and we could see earnings are 220, so they're not out yet. So one thing I might do is just go down this list and look and see if there's anything that looks actionable today. MGM had a big move. LAD, Lithium Motors. This is one we talked about yesterday, Flutter Entertainment. I have no idea what they do, but they were up another 1.3%. Domino's probably up in sympathy. Wingstop below the 200, I don't like. And again, this is another casino stock that looks good. Do we have earnings out on this? Earnings are 225. So from a top-down perspective, we can rank them, we can put them down here, and we can look at what makes sense. And then we built this wonderful tool here that has a number of signals built in. So what I'm going to do is I'm going to go back to the impulse, which is all 3526 of the stocks that I'm interested in. First thing I'm going to do is I'm going to make that list smaller. So let's make it stocks greater than 500,000, price greater than 5. And I don't want to buy stocks here that are below their 200, so let's only look for above the 200. And that gives me 1,000 stocks. Now, within this 1,000 stocks, if it was Friday, I might have gone down and looked at every one of them to quickly assess their pattern and their viability. But what I built in, I being the signal designer and Praveen, the programmer, are a number of signals. This 2-day momentum up is my go-to. So let's see if anything makes the cut. And let's see what we have. Ascend, so technology, actually it's a healthcare, my bad. Must have been news-driven. I don't think they don't make money yet, so it's not about earnings. Their earnings came out and they look like a negative surprise, but the revenue was up. It's a news story. CPA, Copa Holdings, an airline stock, South America. GENI, this looks interesting. It's not expensive. Big move up, pullback, driving the 50 and a breakout. You could see it relative strength of 92. Look at these blue dots. You've got the EMS has been firing now for days. The CPR came in yesterday. And notice down here, the bottom 2 green dots, those are momentum. And the 2 momentums in a row have been a really strong signal. HCP, looks like a takeout. INLF, an industrial play, this is an IPO. And then Paycom, trying to work its way back. So this list, the one that probably I like the best is probably Genie and Copa. Now I've got other buy-sell signals that are built in. One of them I call my multi-time frame CPR buy. So let's just look at that. And that requires the CPR signal, which is a unique moving average crossover signal. It requires it to be firing long today, and the weekly has to also be long for it to count. And there's a lot here, so let's just rank them by 2-day momentum. Let's see what we got. Tyler Technologies, it's expensive, but I like the pattern. Sideways move breakout were their earnings. Earnings were out today, and they don't look so great. Now, notice this thing here says 55. That's a measure of extension. It's not subjective, it's objective. And when it's above 95, it tells me it's extended to the upside. And when it's below 95, it's extended to the downside. So there's a pretty big list here. And I don't really feel like going through the list tonight. But one stock that I know looked really good was Centerpoint Energy. And I can't remember the ticker, so let's see. CNP. And this is one that I'm going to be looking at in the morning. And why did I like it? So, first thing is, the earnings are not out yet, so you have to be cautious. We got another week. But big uptrend, sideways move, and a breakout, and taking out this top area. So to me, that one looks interesting. And if I look down here, it had volume, breakout, momentum coming out of a squeeze. And notice how the green line went up above the yellow and the white is above the yellow. So both the relative strength is good, the volume is good, and I'll be looking at CNP. I hope you have a great day in the market. I'll get back with another video over the weekend. The question is, these are beautiful daily charts here. They'll come up in a second. They all, spiders, look like they're launching. In fact, this one took out trendline resistance on the Qs. Big day on the diamonds and even a good day on the Russell. And the only one that worries me because of this 50-day moving average is the Russell. And as long as the VIX is going down and the dollar And on this chart, we're going to see bonds, not rates. But if the bonds are actually going to rally, I don't believe it. I don't think it's sustainable. I think this market's going to go on to new highs. Have an awesome, awesome Friday, and we'll talk to you over the weekend.